Good day everyone. Today, I will be discussing two topics. First, we will compute the income tax of Ultimate Hospital, and after that, I will explain the special resident foreign corporations under the tax code. So here are the objectives. First, we'll compute the income tax of Ultimate Hospital. Second, apply the correct tax rate. Third is understand the special resident foreign corporations. And lastly, we will identify their tax rules. So let us begin with the income tax computation. So first, we identify the total income of the hospital. So the hospital earned 25,000 from pharmacy, 40,000 from laboratory fees, 85,000 from rental income, and 20,000 from other patient services. When we add all of this, the total gross income is 170,000. Next, we identify the unrelated income. So the unrelated income in this case is the rental income amounting to 85,000. To determine the applicable tax rate, we compute the percentage of unrelated income by dividing the 85,000 by 170,000. So this gives us to 50%. Since the unrelated income does not exceed 50%, the applicable tax rate is 10%. So now we compute the total expenses. First, these include the 10,000 for cost of medicines, 15,000 for depreciation, 30,000 for rent expense, 12,000 for utilities, and 18,000 for salaries. So the total expenses amount to 85,000. Next, we compute the net income by subtracting the expenses from the gross income. So 170,000 minus 85,000 equals to 85,000 net income. So finally, we compute the income tax due. So 85,000 multiplied by 10% results to 8,500. Therefore, the income tax due of Ultimate Hospital is 8,500 pesos. Take note, if the unrelated income exceeded to 50%, the tax rate would become 25% and the tax due would increase to 21,250. So now that we have finished the computation, let us move on to the second topic, which is the special resident foreign corporations. So what are the special resident foreign corporations? So these are the foreign companies, meaning that the companies from other countries that are operating or doing their businesses here in the Philippines. However, they are called special because they are taxed differently compared to regular corporations. So what does it mean? So in simple terms, these are the international companies na may operations dito sa Pilipinas. Pero may special tax rules sila depending on their type of business. So these are the four main types of special resident foreign corporations. So what are those? First, we have the international carriers. So these include the foreign airlines, shipping, and companies. So for example, an airline based in another country that operates flights to and from the Philippines. Their income comes from transporting passengers or goods, so they are taxed at 2.5% based on their gross billings, meaning the total amount they earn from their operations in the Philippines. Second, we have the offshore banking units or the OBU. So these are the foreign banks that are allowed to operate in the Philippines. For example, a foreign bank that provides financial services to clients here. They are taxed at 10% based on their gross income. However, under updated rules, they may also be subject to regular corporate tax rate depending on the situation. Third, we have remitting branches of resident foreign corporations. So these are branches of foreign companies located in the Philippines that send their profits back to their head office abroad. So for example, a foreign company with a branch in the Philippines earning profit and then transferring that profit to its main office in another country. So these are taxed at 15% based on the total profits they remit or send to abroad. So it is important to note that the tax is based on the total amount remitted without deducting the tax itself. So kung magkano yung ipapadala nilang kita palabas ng bansa, yun mismo ang pagbabasehan ng tax. So however, there are exceptions, such as activities registered with the Philippine Economic Zone Authority or the PEZA. So lastly, we have the regional or area headquarters of multinational companies. So these offices do not earn income directly from business operations. Instead, they supervise, coordinate, or manage the company's operations in the region. So for example, a headquarters in the Philippines that manages branches across Asia. Since they do not generate income from regular business activities, they are exempt from income tax. So another important concept is passive income. So this includes earnings such as interest, dividends, rent, and royalties. So these are considered passive because they are not part of the company's main business operations. If this type of income is not connected to the company's business, which means activities in the Philippines, it is not treated as branch profit. So in simple terms, kung hindi siya related sa main business nila dito sa Pilipinas, hindi siya isasama sa taxable income ng branch. So to summarize it all up, special resident foreign corporations or foreign companies operating in the Philippines, and each type is taxed differently depending on their activities and source of income. So that concludes my discussion for this report, and thank you.